Have you ever stopped to think about how strange it really is that a tiny piece of plastic, maybe even just a tap of your phone, can buy you dinner, clothes, gas, and even a plane ticket across the world? You don't hand over gold coins, you don't barter, you don't even pass physical cash. Instead, you flash a little rectangle with your name on it, and in seconds, an invisible system moves money from your future self to your present self. It feels normal now, but this idea, buy now, pay later, took thousands of years of human history to invent, and along the way, it changed economies, cultures, and even personal identities. The history of the credit card isn't just the history of finance, it's a story of human trust, technological leaps, and some very bold experiments, one of which started when a man in New York forgot his wallet. If we roll the clock way back, the first roots of credit weren't on plastic at all, but on clay. In ancient Mesopotamia, around 3000 BC, merchants used clay tablets to record promises of payment. Farmers and traders could buy goods and pay later, with these little slabs acting as an early IOU system. Fast forward to medieval Europe, and you'd find traveling merchants using letters of credit issued by banks, especially paper guarantees that could be cashed in far from home. In colonial America, people often bought groceries or supplies on store credit, with the shopkeeper jotting down debts in a ledger to be settled after the harvest. In all of these examples, the principle is the same. Trust me now and I'll pay you later. But these systems were personal, clunky, and very localized. What was missing was portability, something you could carry with you and use anywhere, without explaining your life story to the merchant. By the late 19th and early 20th centuries, new industries were experimenting with credit tokens. Oil companies like Texaco and gas stations began issuing small metal cards to frequent customers, partly as loyalty tools, partly as a way to encourage spending. Department stores and hotels followed, giving favored clients charge plates, metal tags like dog tags, with their names embossed. A clerk would insert the plate into a machine to imprint the information onto a paper slip, and the customer could walk out with their purchase, paying later when the bill came. These weren't universal cards. You couldn't take your Macy's charge plate to Sears, but they proved the concept of carrying a physical token of credit. Then came the story that's practically a credit card legend. In 1949, Frank McNamara, a businessman in New York, took his clients to dinner and realized, to his horror, that he had forgotten his wallet. His wife had to come bail him out, and he was so embarrassed that he decided to invent a way people could pay without carrying cash. The following year, in 1950, McNamara and his partner, Ralph Schneider, launched the Diners Club card, initially a simple cardboard charge card accepted at a handful of New York restaurants. Within a year, over 40,000 people had signed up, and by the mid-1950s, Diners Club had gone global, accepted in countries like Canada, the UK, and Mexico. It was still a charge card, meaning you had to pay your bill in full at the end of the month, but for the first time, one card worked across different businesses. That little piece of cardboard would later turn into plastic, and even got a cameo in Audrey Hepburn in Breakfast at Tiffany's. Diners Club had accidentally created the blueprint for modern credit. The race was on. In 1958, American Express, already famous for its traveler's checks, launched its own charge card, instantly positioning itself as a premium, globe-spanning brand. It wasn't long before the real revolution hit. Bank of America, in 1958, mailed out the Bank MasterCard to thousands of households in Fresno, California. This card introduced something new, revolving credit. Unlike a charge card, you didn't have to pay your balance in full each month. You could carry debt, paying it off over time with interest. This was risky because people could now get trapped in debt, but also made credit cards much more flexible and appealing. The idea exploded. By the 1960s, Bank MasterCard was being franchised to other banks across the US, and in 1976, it was rebranded as Visa. Meanwhile, a group of rival banks launched MasterCharge in 1966, which became MasterCard. Suddenly, two giant global networks were competing to sign up merchants and cardholders, and credit cards went from novelty to mainstream in less than 2 decades. The 1960s and 70s were a wild west for credit cards. Banks were desperate to get customers, so they literally mailed out millions of live active cards to people who hadn't even asked for them. At its peak, 100 million unsolicited credit cards had been dumped into American mailboxes, an act so reckless it shocked regulators and caused fraud to skyrocket. Unsurprisingly, there were stories of thieves fishing cards out of trash bins or kids using their parents as cards. By 1970, the government had to step in and ban the practice, but by then, Americans had gotten used to the convenience of paying with plastic, and the habit stuck. Technology was racing ahead too. In 1959, American Express became the first to issue a plastic card instead of paper or metal, and this quickly became the industry standard. In 1969, an IBM engineer named Forrest Parry figured out how to attach a magnetic stripe to a card to store data. Legend has it that he literally ironed a piece of magnetic tape onto a plastic card. That little hack changed everything. Now, when you swiped your card, the stripe told the computer who you were and whether you had credit available. The mag stripe became universal, turning credit cards into sleek, swipeable tech. By the 1980s, cards weren't just tools, they were cultural icons. The American Express "Don't leave home without it" slogan became legendary, positioning Amex as a card of jet settlers and successful professionals. Gold cards, platinum cards, and eventually black cards were marked as status symbols, signaling wealth and exclusivity. At the same time, new players entered the scene. In 1985, Sears launched the Discover card, offering cashback rewards and no annual fee, a major innovation that forced competitors to rethink how they attracted customers. Airlines began partnering with banks to issue co-branded cards that earned frequent flyer miles, creating the loyalty point economy we still live in today. By the end of the 20th century, nearly every card came with some perk: cashback, miles, points, or insurance. But with the rise of credit cards came darker stories too. Interest rates and late fees could balloon debts, and millions of people fell into financial traps. By the 1990s, credit card debt had become a defining issue for American households, with interest rates going as high as 36%. Banks knew many Americans couldn't afford to pay off their credit card every month and abused the system to rake in massive profits. As a result, consumer protection laws were introduced to rein in predatory practices. Fraud also became a massive problem. Thieves learned to skim mag stripes, steal card numbers, or commit identity theft. The industry fought back with new tech. The 3-digit CVV code on the back of cards made online fraud a bit harder. In Europe, EMV chips, which store encrypted data, became widespread in the 1990s, offering much more security than swiping. The US lagged behind, but by the 2010s, chip cards became standard here too. Then came the contactless revolution. In the 2000s, RFID and NFC technology allowed cards to be tapped rather than swiped or inserted. By 2007, the UK had contactless debit and credit cards, and the US slowly followed. Today, tap to pay is everywhere, and you barely think twice about paying with a wave of your card, phone, or even watch. In 2011, Google launched Google Wallet, the first mobile wallet to let smartphones handle payments, followed by Apple Pay in 2014. Suddenly, the physical plastic card wasn't even necessary. Your credit card could live inside your phone, your watch, even a ring or bracelet. Looking forward, the future of credit cards is still evolving. Fintech companies are reimagining how credit works, with instant approvals, virtual cards that exist only on your phone, and AI tools that track spending habits. Biometric cards that use your fingerprint to authorize transactions are being tested. Some companies are even experimenting with crypto-backed credit cards, linking digital currencies to traditional networks. It's possible that in a few decades, physical cards will vanish entirely, replaced by biometric scans, wearables, or a system we can't even imagine yet. But through all these changes, the story of the credit card is really the story of trust and convenience. From clay tablets in Mesopotamia to a forgotten wallet in New York, humanity has been searching for ways to make trade faster, easier, and more seamless. Today, credit cards process trillions of dollars every year, powering global commerce, rewarding travelers, and sometimes trapping people in debt. The next time you tap your phone to buy a coffee, remember, you're standing at the end of a 5,000-year journey of innovation, risk, and human ingenuity. And it all started with one man sitting in a restaurant, patting his pockets and realizing he'd forgotten his wallet. If you liked this video, make sure to subscribe and let me know which topic you'd like me to cover next. Thanks for watching.